So good afternoon, everybody. My name is Len Lonzi. I'm the Managing Director of the Preccelerator program. This is a program of Stubbs, Alderton, and Markleys, a full-service law firm located in Sherman Oaks, California. We have a very vibrant corporate transactional team of lawyers, as well as a very capable group of litigators as part of the firm. So the Preccelerator is a program of the firm. I am not an attorney, so anything that I say cannot be construed as legal advice, just so you know. I don't want to give you any false pretense that I'm an attorney and giving legal advice here. But our program today is being delivered to you by one of my friends and a friend to our firm, and somebody who's very important to the ecosystem, both as a person and the organization that Mimi represents. So Mimi Cotter is her official title with the Pasadena Angels is I don't even know, director, investment manager. She has a couple different hats, but she's also an investor as part of the Pasadena Angels. But what's important to know about Mimi is that she's a woman with heart and who's involved in our community. I like to point out these things. She's involved with the Boys and Girls Club of Los Angeles and has helped with their gala. She is a board member for Innovate Pasadena. She is part of the Women Founders Network. She's all over the map as far as our ecosystem and what represents well. And she's our primary contact when one of our companies wants to go in front of the Pasadena Angels. She's my first point of contact, and then really helps our companies do a great job. She's one of many, but she represents well. And with that, Mimi, I'll turn it over to you.
Well, I've got backup. We have our vice chairman here, Kevin Hertzberg, and I guess this is recorded, but he is one of my favorite angels, board member, and Kevin's got a really great background and pedigree. He was with a senior president, VP at by Bank of America. I'm going to mess this up, Kevin, but you know, an expert witness in important cases. And in the last 4 months, Kevin has he's led Pasadena Angels, some really great deals with the Pasadena Angels. And I'm just really lucky to have Kevin be a part of the Pasadena Angels. It's an all volunteer organization. And I invested in the first deal that Kevin led, and he has such a passion for leading deals and committing to this ecosystem. So Kevin is the person that you want to listen to and hear his thoughts on angel investing. So that's what we're here for, to just kind of share our perspective on angel investing and how to build up the ecosystem. Kevin, you want to say hello?
Yeah, thanks for that very nice introduction, Amy. It's a pleasure working with you as well, and it's really been a lot of fun at Pasadena Angels. I came into Pasadena Angels probably 6 years ago, and not having a lot more desire than knowledge about angel investing, and the group has just been very supportive and allowed me to jump in and really kind of learn and take the lead on a lot of things, and it's worked out pretty well in quite a few deals. So happy to share what I've learned along the way. It's been a lot of school of hard knocks, and really just open to questions either today or if something strikes you later. So just kind of keep that in mind as we go through our journey today. And I think maybe you've got a deck you want to share with the group to kind of give folks a framework of what we look for when companies come through.
So I thought I'd share with you kind of our agenda for the day. I'll spend about 5 to 10 minutes on just telling you about Pasadena Angels, what we do, the companies we look for. And then the next slide deck I will share will be our template, our recommendation template of what we look for in a pitch deck. And that's going to be open concept. Kevin and I will share each slide. We'll pause for questions and answers, hoping to give you a perspective on what we look for in a pitch deck. And it's straight aboard what most VCs and angels look for. So right now, the first thing I'm going to share will be all about Pasadena Angels. I'm trying to find that one, Pasadena Angels info. And Oops, sorry, that's the wrong one. Can stop sharing. Now, and I understand why when entrepreneurs come to us is a little nerve-wracking. Let me go ahead and look at my Pasadena Angels info. That's the one I want to share. Okay. Okay, here we go. Okay, so something about the Pasadena Angels, presented to you by Mimi Carter and Kevin Hertzberg. We are Southern California's most respected and connected group of credit investors. We've been ranked consistently one of the top 10 angel groups in the US by Forbes, CB Insights, and Angel Research Institute. And we are definitely deeply committed to helping forward-thinking innovators with funding and mentorship to fuel their success. So far, we've invested $94 million of early stage capital in over 250 companies. And our companies have gone on to raise over $1 billion from venture capitals and private equity. And we have about 100 members to help entrepreneurs build great companies. Our most recent notable exits, our first IPO and our first unicorn, which is MindBody Software, was valued at over $1 billion. And Solium, which was acquired by Morgan Stanley for over $900 million. So I want to share this one particular blurb from Forbes magazine in September 2018. We are ranked 7th among all angel groups in the US. But the most important thing, I think, is talking about angel investors. We've invested almost $23 billion as a group, and we funded over 6,700 startups. But the capital that we funded has helped to finance, over $250 million new jobs, according to the mark. And this is from 2018. So that's the role that angel investors play in the ecosystem. In 2018, I think that number has probably risen. And what are angel investors? Angel investors are, private and creditors. They're seed angels and funders. Now, essentially high net worth individuals who provide financial backing for startups and small businesses. And it's defined by the SEC Rule 501. And I'm happy to give you the information on that, but essentially, accredited investors according to the SEC. Pasadena Angels invested $4 million in 16 companies in 2020 last year, 11 new and 16 follow-ons. We were slightly stopped in our tracks by the pandemic for a few months, and we got right back on and started investing again. And in 2019, we invested $4.7 million in 29 companies, 15 new and 14 follow-ons. But 2018 was our banner year. We invested $500 million in 36 companies, and it was the largest funding event in our history. And in that year, we had some great information and data to share. We invested 38% of our funding dollars were invested in female-founded companies. The top 4 companies were led by female founders with $109,000 on the average round size. Most angel groups invest on average about $150,000 per deal. So that's significantly larger than most angel deals. And the one thing about the Pasadena Angels, we are agnostic in our funding companies, and we don't have a mandate to invest in female founders. But this is what we've done. The companies came in and they were led by these great female founders. We invested $1.6 million in the top 4 companies. So that was a significant year for us in 2018. And in 2017, we were named by the Angel Resource Institute as one of the top 10 angel groups in the US. We were tied with 500 startups. So that was interesting. And this is how we compared to all of the angel groups in the US. The latest Angel Funders report from the 2020 highlights says that most angel groups invest about $2.5 million per year. We invested $4 million last year in 26 companies. And 40% of the deals had board seats. And the Pasadena Angels were online with the national average. We also had about 40% of our companies, we had attained board and observer seats. And our average deal size for 2020 was $225,000. And I think the average for most angel groups was around 145 in 2019. 2020. Okay. And this is probably what you want to hear, what we look for in a startup. We want to start up that space in California, Southern California preferred, but we are actually expanding our geographic reach. We have a lot of great companies from syndicated groups that are introduced to us. And last year, I think we invested in 4 or 5 companies that are outside of our geographic reach. And we would like to see a minimal viable product, proof of concept pilots. And I think this is where we're struggling with right now is this second bullet point. I think a lot of angel investors now are looking for traction that, looking for revenue. So that's something that we're still kind of really redefining in this second bullet point. But the third bullet point is pretty clear. We'd like to see intellectual property. We'd like to see proprietary and defendable intellectual property rights. And then we want to see a large market opportunity with defendable market differentiation. Our funding criteria, the jockey, that's always the most important thing. The founder who's a compelling leader with a success record and really a strong domain expertise. The idea, we want IP protection, market validation, customer validation. We want to see strong competitive positioning and strong differentiation. The deal, we want a realistic valuation, pro rata rights, information rights. We would love to get guaranteed of updates on a quarterly basis at least. Convertible notes versus equity. We prefer equity deals. There's a lot of safe notes out there. We're still struggling with that as an organization and also as an industry. And most importantly, we like to see a viable exit strategy. We want to see a clear path towards an exit with acquisition targets and partnerships well defined. And that may be hard when you're a new company to kind of think about that. But we'd like to see that you've got a vision towards the exit. So these are just a few of our portfolio companies that are making news. We really try to support our portfolio companies, and they're all just doing really well. Really impressed with how much our companies have, pivoted and survived this COVID-19 crisis in the last year. And this is our monthly process. I am the person who does the administrative side of the Pasadena Angels. So I see approximately 600 companies a year, 600, 700 companies. We see 40 to 50 applications a month. And we narrow them down to probably, 18, 20 companies that meet our, base criteria for funding. And they go through a pre-screening process. They meet with our pre-screening panel comprising of 3 to 4 members, spend 20 minutes getting to know the company and the founder. And then if you make it through that cut, we ask you to come and pitch to us in our pre-screening meeting. And then in our screening meeting, which is the last Wednesday of the month, we ask 4 companies for that entire process to come and present to us. And they compete for the top 2 spot to come to our company evaluation meeting, which is the third box in front of you. And typically, if you make it all the way to the company evaluation meeting, the chance of you getting funding is pretty strong. It's about 75% opportunity for you to get funding from the Pasadena Angels. And they present to our entire membership. Afterwards, there's about a 30 to 40 minute due diligence, determine if there's sufficient interest to move forward. If we have at least 5 members who are interested, we ask you to come back in and meet with us. And we do everything via Zoom now. We've been on Zoom since 2017. So our members have a pretty agile on Zoom, I would hope. And then due diligence, the companies meet with interested investors. We conduct due diligence. And Kevin is working on our due diligence process, trying to refine that and make it just easier for members and entrepreneurs to really understand. The term sheets and funding typically occurs within 4 to 8 weeks of the due diligence meeting. And that's on the second Wednesday of each month. And that's it. That's the Pasadena Angels in a snapshot. If you'd like, please follow us on Instagram, Facebook, and Twitter. Okay.
Thanks, Mimi.
Any questions so far?
So if you have questions, folks, why don't you put them into chat? That way it's easier for us to see them and read because we have a number of people on multiple screens here. That would be easiest. And I don't see anything coming up right now. So Mimi, why don't you just plow forward and we'll take questions at the end.
Okay, so my next slides I'm going to share. So there's one question. Can you define the MVP you need? Kevin, do you want to take that?
Sure. We'd like to see some evidence of traction. And, you know, we have seen kind of early in our process that some of the companies coming in have a PowerPoint, but that's about as far as it goes. And what we'd like to see is basically that either the product has been built and tested to some degree, or there is a very strong market presence or demand for that type of product and service. And there's no hard and fast rules for it, which I guess makes it a little tricky to kind of describe and maybe, you know, a little bit difficult to navigate as an entrepreneur. But you have to go with your gut a little bit. But basically, you know, we do think of it, if it was your money, how would you get more comfortable with the concept being presented? And for us, we like to see some type of market adoption or traction. You could be pre-revenue. I mean, you could be doing things that are freeware and come to us with a plan to convert. But in general, you know, I think we're just trying to ascertain how viable the concept or company is in the marketplace.
Kevin just brought up a really good point, is that, you know, make it comfort for us. You know, de-risk the opportunity for us, show us that this is a great opportunity. Because angel investors, the big key differentiation with the angel investors and VCs and funds is that we write money out of our own checkbooks. It goes straight from our checkbook, our, you know, family trust, whatever it is, straight into the company's funds. This is our money. So we are a little more risk adverse maybe than a typical VC firm. But, you know, when we invest in you, we really want to make sure that you succeed. So our tagline is more than the money. So we're going to make sure that we connect you with winning strategies and further, you know, syndication groups. So the next question is from Carrie. Could you describe more on different types of traction? Early stage products, would a beta tester count? Okay. Daily after users, yeah. Again, I think we've opened up a can of worms because that's really difficult with different industries. I'm going to kick it back to you, Kevin.
Oh, is there? Okay, sure, no problem.
Beta testing, we would prefer that you actually have a product that's kind of really go to market ready, I think.
Yeah, and you know, again, it doesn't have to be something that is, you've turned on the faucet and you're generating millions of dollars a month in revenue. Sometimes it's really just a matter of customer interest, engagement, time using the product, repeats. We do see companies coming in that are able to get a customer once, but then the customer tries the product and they don't like it, and so they don't come back for more. And it, you know, if they're pitching to us monthly recurring revenue, which is sort of a holy grail in the angel space, we want to see loyalty amongst the customer base. So those are some of the concepts around traction that we look for.
Okay, so one of the questions we have, does any of your angels have experience in InsurTech? We do have a few members. I can't think off the top of my head. You are welcome to come to our website, take a look at our members, do some research for your own. And we have I think we're one of the few angel groups that has a picture of all of our members on with their LinkedIn, if they have a LinkedIn profile. So you can check that out. And then go ahead, Kevin.
Yeah, I was just going to go a little further and say, like for me, my background is in finance and fintech, and so you know I'm a little bit more of a generalist when it comes to the financial services. And while I may not be an absolute expert in the insurance side, I have crossed paths and dealt with a number of insurance products in the banking space from which I come from. So I might encourage you to look for folks that are a little bit more broad than specifically insurance, but you know, again, it kind of depends on what you're looking for. But we definitely have people that I think are going to be knowledgeable in the insurance space and financial space in general.
So a question from Vincent: how has the investors playing field changed since the pandemic? Is it becoming more common to invest in a startup where you've never met a founders? No, absolutely not. We need to meet the founders. We have Zoom. We assume that you can get on Zoom too. And we actually have a high touch with our founders. Sometimes they don't like it very much because they have 3 or 4 meetings with us. On average, our founders, by the time they get funding from us, have spent probably a good 5 to 10 hours in meetings with the Pasadena Angels. This is a personal relationship in so many ways because we are writing a check for you from our own personal account. We want to see you succeed and we want to know you. That's why the jockey and the founder is really important to us. So we personally have never invested in a founder we've never met. And if you're talking about in person, then that's probably the case. We haven't met a lot of the founders in person since, April of 2020.
Yeah, just to expand on that, when a year ago, when the pandemic was really kind of starting to take hold, it was a scary time for our organization because we really were a face-to-face organization and sort of focused on investing SoCal, locally. And we had to pivot as everybody else did with Zoom and remote access. And we weren't sure how that was going to work within our membership or with the entrepreneurs. And as a couple months went by, I think people really embraced it. And personally, I really enjoy it. I think we'll probably end up going hybrid, when things do come back to normal. And it's obviously caused us as an angel group to really get good on Zoom and so forth. And I think it's opened up a lot more access for us to deals, and vice versa. I think it's opened up a lot more investors to entrepreneurs. So I hope, you all that are looking to raise funds are taking advantage of that as well. But I think in general, angel groups have really opened up their geography because of the advent of remote access and the acceptance of it across the ecosystem.
Maybe in the interest of time, so you get through your presentation, why don't we defer the rest of the questions till the end?
Okay. All right. So my next, Len has asked me to share our perspective on what we look for in a pitch deck. So I put together a pitch deck template, and we're going to go over that. Hold on one second. I'm just kind of setting it up right now. Okay. And I will be with you in a few minutes. Okay, so I will share that right now. It's a pitch deck template. It's not your 10 slides, it's 11 slides. So I'll go ahead and share that right now. Okay, so here's our template, our pitch deck template for you. This is what we look for in a pitch deck. And again, this is very broad idea of what we look for. And I would want to encourage all of you. I'm getting a call from one of our syndication partners in another angel group. I'm going to hang up right now. What we want to let you know is just your pitch deck should capture attention right from the very beginning. Storytelling matters. We want to hear your creation myth, how you came to this idea, because when we're looking at you with your pitch deck, we're evaluating your story and your ability to convey that story, because if you can convince us, I'm sure you convince customers and partners along the way. So take us on that journey with you. The first deck we would recommend is the elevator pitch. That's going to be the hook, the main hook from the very beginning. Capture your investors' attention. Clarity is really important to us. Some of the elevator pitches from companies we've invested in. The first one is a know-it-all product that helps you do it all. We solve beauty and personal care challenges for today's busy modern women by delivering convenience and comfort through innovative products that can be used anytime, anywhere. And the reason I have that up is one of the companies I invested in. I said no to them several times, and they came back and gave me this pitch, and I stopped to listen and brought them to the Pasadena Angels, and I think they've got about $400,000 in funding from us already. They're doing tremendously well. The second one is pitches the first electric car charging platform that turns chargers into profit centers. As you read through these, you know, I hope you can see that we're just quite trying to convey what's going to capture the investors' attention as you move into the second slide, which is talking about the problem. Okay, I am stuck right now. Sorry about that. The problem. Describe the problem that your company is solving, and sometimes that problem comes from, you know, an experience that you've, a pain point that you've experienced. So how did you identify this problem as an opportunity? And the third slide is solution or opportunity. What's the description of the product or services you're offering? How is this unique? And what were your customer discovery process and validation of this solution? And the fourth slide is the market size. So describe your target audience, your target market. How large is your total addressable market? What percentage of the market you plan to capture? And what does that translate to in dollar size? How have you validated there's a market for your product or service? And this is the second time I've talked about self-validation. You can hear that a lot. We like to see that you validated your idea and your product. That's really important to us. And IP, proprietary technology. How does your proprietary technology give you an edge over the competition? Do you have any patents that are approved and pending? How are you going to keep other people from stealing your idea? Is really what we want to hear. And your business model. How do you make money? What's your main revenue model? Secondary revenue model, licensing, subscription fee, freemium that's going to convert. So we'd like to see, you know, exactly what your business model is and make that really clear and concise for us. Sometimes I see pitch decks that go through for 15, 20 slides, and we have no idea how you're going to make money. That's really important to us. And slide number 7, this is also very important, competition. I think it's very, very rare that we see a company that owns the space and has no competition. Please do not tell us you don't have competition. So if you can give us a competitive slide of who your competitors are, what sets you apart from them, how much of the market they've captured, how much you plan to capture with the market, what's your differentiation, and what's your competitive edge? So that's the competitive slide, competition slide that we'd like to see. And then your marketing plan and traction, you know, where you plan to go in a year, you know, 5-year plan, you know, what are your sales projections? That's what we'd like to see on slide 8. And then this is a really, really important slide for angel investors, your exit plan. There's a quote that goes around in the angel investing world, and it says that an angel investment is a donation until there's an exit. This is an illiquid investment that we're making in you. We don't get to take our money out if something goes wrong. The only way that we're going to get our investment back, hopefully a 10x return, is that there's an exit. Either someone's going to acquire you or an IPO. And an IPO is a long shot. Only 16% of all venture-backed companies actually get an IPO. So acquisition is what we want to look at. And if you are at a stage where you have conversations already with potential acquirers, that's a really great thing. You should have that on your deck. And then the team. We want to know about you and your expertise, you know, what you do. So this is where you kind of, you know, tell us about how wonderful you are.
Unicorn adjacent.
I feel sorry for all the co-founders. And the deal, how much you're raising, your valuation, terms of the deal, previous funding, all the good stuff. And again, I've had a few companies come through us and we don't know what the deal is because they don't have it on there. We would like to have that clearly defined. And that's it.
Great, thank you, Mimi. Awesome slide deck presentation. And you know, as I coach founders also, you know, it's amazing how many times that last slide is missing. Well, what are you asking for? or who is this? Who is the competition, and why haven't you articulated that? So all good points.
Okay, so I'm going to go back. Yes, Gina, we do invest in safes. We don't like it. We do invest in safes. Let's see. What's the average agreed valuation? There is no average agreed valuation. What we can agree as angel investors is that we're seeing valuations go up and we don't like it. So if you do, I think valuation is something that you should talk to your advisors, and we struggle with that. I don't know what to say about that, Kevin.
Yeah, I'm with you. They can be, kind of all over the place, and definitely we have seen a trend upward, since the pandemic, which in my view is like counterintuitive, but nonetheless, you can't fight the tape. That's just kind of the way it's been going. I would say, one thing about the valuation is be prepared to justify it. We get folks coming in, and there's one side that'll say, well, we haven't set it yet. We're going to let the market set it. Well, that doesn't really give the investors much guidance. And oftentimes you may not like the number if you want the angels just to set it. So I would try to come in with a reasonable valuation for your company and talk about how you came up with it. Is it on revenue? Is it on comps? Is it on just a gut? What is it? And you will be asked to defend it.
So I'm going back to Jason. Hi, Jason. So you said the average deal size is about 225,000. Talk more about the average total raise for these companies. Do you typically provide most of the funding or contribute towards a much bigger raise? So I've been with the Pasadena Angels for 5.5 years. When I first started, the average deal size, the raise was around $500,000, $250,000 to $500,000. And now they're about $1 million. So we rarely take the whole deal. We just can't. I mean, that's too big. That's why angel syndication is so important. We network with fellow angel groups from TCA here in LA and Orange County to, Band of Angels up in Northern California, Berkeley Angel Network. We work with Rockies Ventures Club. And the nice thing about being part of Pasadena Angels is we are really connected to the ecosystem. We can fill that round for you. And Kevin's a good example. A company came to us in 2019. They were a little early. It was a cancer screening product. But we loved the founder. He was amazing, smart. We felt like we were doing something really wonderful. We loved the technology. He was just a little too early for us. Kevin followed that deal, and in a short space of a year, he got almost $500,000 from us with another $200,000 from a partner. And now Kevin's leading the syndication charge on this company, and they've got almost $1 million. And Kevin is not stopping. He's probably going to close it to $1.5 million. And I think that's pretty great to come to an angel group with a novel idea that's not getting traction with other angel groups. You've got someone like Kevin to adopt and advocate for you, and to close a 1.5 million round probably by the end of the year is pretty amazing.
That's a great point, Mimi, that you brought up there, and that is that syndication is a big thing, and there's a lot of angel groups out there, and really before the pandemic, the angel groups would, if you weren't geographically close, you probably didn't connect with them that well, but because of everybody's acceptance of remote access now, the syndication network nationally has really caught fire. And as Mimi so kindly said, I've had some good luck syndicating this one company that Veriskin is the name, the cancer screening device company, and really had good luck syndicating it through the syndication network. When you do pitch to an angel group, I think it's important to try to get connected to get to a point you have a lead investor. And once you get that lead investor investing alongside you and helping you through the process, getting the term sheet going, it makes it a lot easier to connect with other angel groups and syndicate and so forth. So I guess the two pieces of advice, it's kind of a long answer. The two pieces of advice there are work hard to get together with the right angel group that's a good lead investor for you. And then two, if your round warrants it, really prepare to keep going through syndication.
Mimi, can you talk a little bit about the process of, as people come to you, finding that angel within the group that becomes your champion? And is it best to come to the group with that champion pre-identified who could introduce you? Or if you're coming in blind, what kind of expectation is it that you'll find a Kevin that will take on a company and shepherd it through the process?
I think with Veriskin, they came through blind. I spoke with the founder and put him through our process. He was very impressive. I think as he went through the process, we were realizing he's too early for us. And what we do is we call a monitoring process. A company's a little, early for us, we'll monitor that. And Kevin took on that role. He volunteered. He saw something in Veriskin and volunteered and kept base in touch. What I would recommend is we are actually starting office hours again. We used to do that in person, and we're doing office hours again. I'm trying to determine when to do it, like the last Wednesday of the month or, the first Wednesday of the month. But we will do that. So if you want to go to your website and sign up for, email notification, we'll let you know. But that's what I'm trying to do again, really, is to kind of offer our services to, the startup ecosystem. Spend 10, 15 minutes asking questions, getting feedback from investors like we're doing today, but on a smaller, more intimate venue.
Excellent. Thank you.
Okay, something about crowdfunding. Makes sense. Do angels directly? And we don't directly invest in crowdfunding deals. Yeah,
but I would say we do consider it, not investing in it. But when somebody comes in that has had significant crowdfunding, that is a factor we consider.
That's validation. So, that's validation and traction.
Exactly, and traction or whatever, however you want to, kind of couch that. But I'm with Mimi. I don't know of the angel group folks that are investing so much in crowdfunding, but we do definitely use it as validation.
There's definitely a vein of in these questions. Do angels have prop tech or multifamily real estate experience? Yes, we do. We invested in a couple. Real Key was a company we invested in that is a prop tech real estate company, and a lot of our members are real estate investors. So I think there's a lot of domain expertise there. Okay, and I don't want to miss.
I'm one of them.
Here's a question that came from two different people, and they relate to each other. So the first one is, what specifically do you like to see in an exit? And then the second question is, you mentioned you want to ideally get to a 10x return. Over how many years is that expectation? So I think those two kind of go hand in hand.
Okay, Kevin, you want to take this?
So you gotta, you're getting in these deals to get some kind of return. So you set a benchmark somewhere, right? So 10 just has some cachet to it. We get them higher, we get them lower, but do know that we understand there's a lot of risk in these deals. So we do have high expectations on return. So, a 1.5x over 5 years, that may be okay in like the stock market, but for angel investors, that's kind of low. And so it's going to depend on the industry. It's going to depend on when we come in. So all those things kind of matter. I don't know that necessarily me personally, when I invest, I do that calculus to try to figure out, what is the multiplier at the exit? I don't think you know at the stage when they're coming to present to at least our group or the angel groups. The investors are just kind of sitting there thinking, do we think we can really see this thing scaling over, say, a 5 or 10 year time window?
And the truth is, a majority of companies have a big pivot within their even at the end of first or second year, and that changes the equation. Sometimes there's a huge setback. I haven't seen a company that hasn't done a huge pivot. I think, would you say about 70% of the companies that come to us do some kind of a pivot within the first year or two?
Yeah, I think that's right. And, that's probably skewed a little higher now because of the pandemic. We saw a number of companies, our portfolio companies, pivot. We were very worried about them, as this was all breaking. But for a number of the companies, the pandemic actually accelerated their growth. And it's not by accident that they accelerated. They're smart entrepreneurs and jockeys, as Mimi alluded to, and they seized the opportunity. So those opportunities for pivot come in a lot of different ways, and as an entrepreneur, I think you need to be ready for them and expect them, because probably the journey for most of the companies that present to us, as Mimi said, there's going to be a pivot, and as the leader of those companies, you need to be watching and ready to jump on them when they present themselves.
And this goes back into what I talked about, into the criteria. We expect to have information rights, and what we mean by that is, keep us updated on how you're doing. Give us an update on monthly, especially if you're new. You just got funding from us. Give us an update, every couple of months. Tell us how you're doing, because there might come a time when you need our help. You need us to connect to a board member at Avis or something like that. We have over 100 members with a lot of deep connections and experience in not only Southern California, but throughout the US. So it is to your benefit to keep us updated on what's going on. It's also a good way for you to be cognizant of how your business is doing, what are some of the challenges and struggles and times that you face. And so when those updates come to us, we know what's going on. We can actually jump in ahead of time to help you. But if we don't know what's going on, and a year later you come back to us and say, hey, you know what? I'm thinking that we need another $300,000 to get us, through this pivot. We don't know what you're talking about. That creates a kind of a disconnect in the relationship, because when we invest early on, we are really trying to help you succeed. And so keep that line of communication open.
Yep, and certainly we like good news, right? So if things are going good, we like to hear that. But again,
but we're good with bad news too. I mean, I think a lot of our members kind of jump in and say, hey, I think I can help you with that problem.
Yeah. And to Mimi's point, that when the news comes in, we do have access, even across our portfolio companies or our members, that can help you leverage the good news and maybe minimize some of the challenging times. So definitely think of your investor as a partner, not somebody that you just have to answer to.
Yeah. So there's a question from Stacy. We do have investors that are interested in media companies. We have several media bigwigs. We have Jeffrey Schlesinger, from the former president of Warner Brothers, just joined our group. So he's going to be giving a talk on streaming media and the whole media business next month. Do you provide coaching how to seek and attain IP? We don't, but we can refer you to Stubbs Alderton, Carolyn Cherkasky. Yes, gave us a great presentation on term sheet. I'm sure Stubbs Alderton has a lot of great IP attorneys that can give you some great advice.
Thanks for the plug, Mimi. Here's a question just operationally. So after funding, how involved does the angel group get, or individual angels get, or how involved can they get into the operations of a company?
It depends on the company. I mean, we actually have a couple companies, our members have joined the board as advisors, and they're helping to lead the deal, lead business development. You know, there's a company that we've invested in. This company is strictly, has only investments from the Pasadena Angels. And one of our members who used to be with SpaceX is on the board of advisors, and she's also their fractional CFO. So there's a lot. And then
Yeah.
there are others, you know,
Question,
who,
knowing the answer, I think it's instructive for people to realize that this group of 100 people, if they do make an investment, becomes a huge resource for you. And you know, whether you ask for help directly, which is what I would always recommend, if you need help, let them know. They're putting money in because they believe in you. If they believe that their investment's going to go south because there's help that's needed and it's not being offered, that's not going to benefit them. So I think it's important that you realize that there's great resources within the angel group in of itself, outside of the money, that can be very valuable. Let's see, what other questions did we miss here? If you have other questions, please add them in. I think we're getting to most of them. What are some of the things you don't invest in? Straight off, like you know, I see deals come in. You know, I have this slate of movies. I have this content project. You know, how do you deal?
tell you, here's my top three. We don't invest in movies, films, television shows. We don't invest in real estate. We don't invest in other funds. What was the third one? Oh, we don't invest in restaurants.
Restaurants.
Yeah, we don't invest in restaurants.
Well,
We like to
restaurant
eat in
tech is
restaurants.
huge.
Yes,
Yeah.
restaurant tech, but we don't invest in actual restaurants. Industrial
Cannabis.
hemp. You know, I bring them in. I bring them to our pre-screen. It just has never, that little spaghetti strand has never stuck to a wall. You know, our members just, I think there's so many unknowns about, not hemp, but cannabis right now, that our members are still a little gun shy. Do you think so, Kevin? That's the case?
I think the members are. I'll say personally, I'm very bullish. I haven't invested yet, but I'm very curious, and I do think it's the very, very early stages of what could be a really big and profitable industry. I'd like to try to get more involved with it, and I'm you know, looking to network to do that. But you know, as of yet, I haven't invested, and the companies that I've seen come through, they haven't impressed me. But again, I'm very bullish on the whole industry.
I loved ease. I went to Tech Day and talked to the guys from Ease and said, "Hey, are you guys looking for funding?" And this, I think this is after they've gotten like $50 million in VC funding. So it was out of
Yeah, and you know, to that point, I'm a pretty frequent watcher of CNBC, and more you see companies coming on in the cannabis space as speakers, and there's a number of public companies that are, you know, doing pretty well in that space. So that's really caught my eye.
How about consumer products, direct to consumer?
We just had this conversation. I was on a syndication call with a couple of angel groups. And we were talking about how it's a struggle for our members to invest in consumer products. We actually invest in a couple of consumer products. It just depends. It depends on how you catch fire. I think this is one thing that people don't realize, and Kevin and I talk about this a lot, is when you come to one of our meetings and you pitch to us, there's a set number of people in the room, and it depends on the members in the room and whether or not your idea catches fire with them. We typically have about maybe 20 members who are regulars, and then we've got about another 20 to 35 members rolling in, and it just depends. But I would say that consumer products have not done well with the Pasadena Angels. On average, we've invested in about 2 consumer product companies in the last 3 years out of 40.
Yeah, and sometimes those companies coming in are really a consumer product company, not products. And so it's really, you're investing in the product, not the company. And I think if there's companies, consumer product companies that are coming in with you know, several different SKUs, and they've got a plan to really kind of grow across, across that space, that's going to catch more interest than somebody who's got, the latest and greatest teddy bear.
Although I shouldn't say that, because I invested in a consumer product with just one single product. And now they've got, 15 lines and they're doing really well. But
Yeah.
I think in that case, it was one of those things where I invested in the team and the idea. So
What's hot right now? What are you finding you're getting a lot of deal flow on from an industry standpoint? Are there any trends that you're seeing of what people are working on from an innovative standpoint?
we're just seeing a lot of biotech deals.
A lot of what?
We're seeing, it's funny, I laugh at this. I was telling Kevin, we don't have the really deep expertise in biotechnology, but we're seeing a lot of biotech deals. Our members really love that. And I think it has to do with this pandemic and the realization that there's so many changes and technologies are being available to scientists. There's telehealth, there's, so much traction and discovery in science right now. So I think for us with the Pasadena Angels, there's a lot of media tech, I think. And we are hoping to direct our members towards more, we're in LA, we'd like to see more media tech companies. So we're seeing a lot of that, Kevin, with, a few companies that have come through. That's what I'm seeing. So Kevin, what do you think?
Yeah, I agree with that. I'm seeing more fintech now. I've been looking for it for a while, but it does seem like that's starting to get traction at the angel level. I mean, I think there's been some folks that have been pretty successful, getting into the VCs and so forth, and it's trickling down to the angel level. So I think fintech is another space that seems to be getting some traction.
Yeah, we have a fintech mafia at the Pasadena Angels right now with John Keatley and Cecil Basil. So.
And just to give you a little bit of an idea, because I know many of the people on the call right now, we have InsurTech, we have e-commerce, we have applications to help businesses grow their business, loyalty programs. We have a gaming company, we have a cybersecurity company, we have a technology platform for convenience stores, we have an app that enables you to tip folks when you don't have cash. And those are the ones I'm looking at that I see the pictures of the people. If you don't have your picture on them, I have a hard time remembering who you are. So those are some of the companies that are online right now. In full disclosure, some of them are applicants to the Preccelerator, and I know them well, and some of them are Preccelerator companies. So some of them you've seen.
And they're great. I think the thing with the Pasadena Angels, and it got me thinking, one of our presenters came in, I think he was either a 500 startup or a Y Combinator. And he stood in front of the room and said, it's really hard to get into Y Combinator and 500 startup. It's like getting acceptance at Harvard. And I said, gosh, that's really hard. And I looked at our numbers, and on average, we see about 800 companies in a year, and we invest in about 15. Like, wow, our numbers are pretty, on par with getting acceptance to Harvard too.
Yeah.
So, and it's not something that we exclusively try to do. It's just like the competition is pretty fierce to get in front of the Pasadena Angels, and the way that we winnow the process down. Winnow. The process down, from 40 at the beginning of the month to 2. That makes it a little harder to make it to the final round. But, if you make it to our screening process, we're in the top 4, and we do actually pursue. This month we did that. We had 4 companies to screening, and 2 of them didn't make it to our final evaluation. But, those 2 companies had side investors performing due diligence, and we'll see. I think it looks like there's some interest in those 2 companies. So this month we might be funding 3 instead of 2 companies. Yeah.
Right. Excellent. I know that there was a question that we didn't address. How many Preccelerator companies have been funded by the Pasadena Angels? And I know in my short tenure here, the number is 0, but I've only put, I think,
You only put two. Yeah.
I've only put two in front of you, and one of them made it to the top four. So actually, two of them made it to the top four.
They made it to the top four, and
Yeah.
they were great. I think, again, you know, as I was sharing with Jason and
Melissa.
Victor and Melissa, is that sometimes it's, you know, whoever's in the room, right? You've got, and it doesn't mean that your idea isn't great. It's just like, it's not fun. It's not fun about the Pasadena Angels. And I think Kevin brought up a good point too. And I want to let every single entrepreneur in this room know is not every angel group, not every angel is going to be a good fit for you. And you have to recognize that too. You know, you may not want our group investing in your company. We may not be a good fit for you, but another group could be a good fit for you. Say somebody up in, I don't know, North Carolina might be a good fit for you. But you know, there's an ownership in that. You don't have to take money from every angel group, and you shouldn't. And what I think we're trying to do is really, I've talked to a couple of angels who've been with the Pasadena Angels for years, and we are really pushing for our companies who didn't make it through a process to connect with the SBDCs and advisors, because the best thing you can do for yourself is establish a really strong foundation, bootstrap yourself so you're in a stronger position to negotiate when you do meet with investors, and especially angel investors. Does that make sense?
Yep. Well, we're coming up on an hour. Not to cut you off, Kevin, I'm sorry. But we have a couple more minutes for some questions if people have them, or if you have any last things that you'd like to impart onto us, Kevin and Mimi, please do.
Well, thanks, Len. I'll just kind of jump on to Mimi's point there is when you go into fundraising mode, get used to hearing no. You're going to hear no a lot, and there's no, not a fit, and no, not now. And so, you know, the not a fit, it's not a death sentence, as Mimi said. It's just not a fit with that particular group. There's definitely other groups that could be interested, and oftentimes the group saying no, not a fit will help you find those. And I know we refer out folks that don't make it, you know, to funding with us all the time. So that's the no, not a fit. But the no, not now, it just means you're a little early. And again, maybe you're a little early for us, but not somebody else. But even the too early, we work with you. You know, if we see promise, we want to help mentor you and get you to come back again and pitch again and so forth. And the Preccellerators really do a great job, I think, of grooming companies for pitching to the angel groups. And, you know, it makes our job a lot easier because everybody is better aligned with expectations. So, you know, just get used to hearing no, but it's just part of the process. There's probably a yes out there for you somewhere, but it's in the future.
And just one final note, I think, Len, I really believe in entrepreneurs, and even the entrepreneurs that didn't get funding from the Pasadena Angels, I'm connected with them, friends with several of them on LinkedIn, and I've connected them with other funding sources. So while I'm disappointed that we didn't invest in them, I've seen some of these companies get funding sources like from early stage venture capitalists and just blown us out of the water. And I occasionally will drop a bomb with one of our members saying, you know, they got funding from someone else, so you guys missed out. So we're here to support entrepreneurs.
That happens to me too. Well, the last question I'm going to ask is, someone asked if someone wants to become a Pasadena Angel because they are an accredited investor, what does that process look like?
It's really easy. Just show us your money. You can contact me. We ask you to attend 2 meetings, and then you fill out an application and you meet with our membership chairs, and they interview you and see if you're a good fit and if we're a good fit for you. And then you become an angel investor, and I hope you write nice big checks for all these entrepreneurs.
Excellent. Well, Mimi and Kevin, thank you for your time today. An excellent discussion. I think we have a great insight into what the Pasadena Pasadena Angels are, what they have been, and where they're going. And the Preccelerator is a proud partner with the Pasadena Angels. I love working with all the folks that I've worked with in the Pasadena Angels over the years. And Mimi, you've been a great resource to us. So thank you very much.
Thank you, Ken. Thanks, everyone.
Thanks, Len. Appreciate the invite.
All right. Bye-bye.
Bye, everybody.